So there is one aspect to AI stocks that I haven't talked to you guys about, and it's actually kind of my buying strategy. It's an interesting scenario that I want you to take a look at because there's a very serious reason why there's certain stocks that are associated and part of obviously the AI sector that I am not buying. Okay, and there's ones that I am even moving more into. So that's what I'm going to share with you and everything here for you. So if you ever does, please hit that subscribe button, that bell notification, and let's jump into this. Okay. So this particular piece of information really kind of amplifies and just narrates the reason and the logic behind what I'm going to share with you. Okay, so buy the chip dip, skip hyperscalers, but it's really the skip hyperscalers component of this until AI payoff becomes clear. Okay, so there are specific stocks, AI stocks that I am definitely buying and moving more into, and it is the chip manufacturing, memory manufacturing, and others in that AI stack. And there's parts of those companies in the AI stack that I am not buying. Okay, so kind of looking right here in this in the purple. This particular analyst, it was Melius Research head Ben Rizzi's told CNBC to lean into chip stock weakness and stay clear of cloud giants paying for the build out. That's the key. Cloud giants paying for the build out, hyperscalers, right? Quote, I'm telling them to buy on the dip. There have been opportunities like this in the past, and we just don't really see any change, Rizzi says. His list of buys covers NVIDIA, Broadcom, Micron, AMD, and Dell, while Microsoft, Oracle, and Google are on hold until their AI monetization model becomes legible. And that's what it comes down to. So part of my investing strategy is I have not been investing in the hyperscalers, the Microsofts, the Oracles, the Metas, things of that nature. Okay, and I've been really more focused on investing in, again, the chips, the memory, other parts of the AI stack, all the way down to like energy. Investing in Bloom Energy, Vistra, things of this nature. Okay, and this goes on to talk about some really interesting key components that I want to share with you. So right here in the orange, whether AI demand, I'm going to read it because it's really important. Whether AI demand exists to whether the spenders can ever earn it back. And he's talking about the spenders. He's talking about the hyperscalers, right? The Microsofts, these guys right here, the Microsoft, Oracle, Google's, all that kind of stuff. Okay. Whether the spenders can ever earn it back. Rizzi argues the answer is to own the sellers of compute. Quote, the world is shifting towards compute. It's been 3 years into this, and we're probably into a 20-year trend. Compute is really the fuel. It's the oil, and it's going to be bigger than oil ever was. Interesting, right? And to me, that really does bring home the reason and kind of a lot of logic why I'm investing in the chip side, the memory side. I almost think of it as like, picks and shovels, if you will. And I realize that's not necessarily kind of maybe a direct corollary, kind of, going back to the California gold rush back in the day. The companies that got really rich were the companies selling the picks and shovels. And so in this scenario, it's the Microsofts, the Oracles, and the Googles of the world that are the gold rush miners, right? Don't really know if they're ever going to hit gold. Don't know if they're really going to get rich, or really, to put it into kind of perspective, how their AI strategy is going to work from how they're going to pay for it, right? But it's the companies selling them the picks and shovels, the NVIDIAs, the Broadcoms, the AMDs, the Microns, SK Hynix, so forth, that are getting rich. The Bloom Energies, right? Okay, so I mean, you can look at kind of like something that's, NVIDIA anchors the call. Earnings reports have showed revenue of 81 billion, up 85% year over year. Data center revenue 75 billion, 80 billion. PE ratio of 24 with shares up 12% year to date. NVIDIA has been lagging, and I did a video on this the other day. 100% NVIDIA has been lagging. Okay, Broadcom has got beaten up because they didn't quite give enough forward-looking guidance and all that kind of stuff. It's only up 13% year to date. See, what you've seen here is a lot of capital money has rotated out of chips and rotated into memory and other parts of the AI stack. Micron, we've talked about it. They absolutely crushed their earnings on Wednesday after the bell. PE sits at 11, which is fantastic. Okay. And again, doing really, really well. AMD up 37%. So from a chip side, they're kind of the leaders in the clubhouse, if you will, up 37+%. Definitely beating NVIDIA and Broadcom as far as percentage up this year. Up 75% year over year, 757% year over year. My apologies. Dell is one that people don't really think of. Dell has essentially put together an easy AI deployment model for their clients, how their clients can easily, air quotes here, easily move into into AI, right? And that's what's interesting about this. So I think there's a lot of merit to this. Again, think of that picks and shovels versus the gold, the gold miner scenarios. Why am I? And again, I'm kind of agreeing. Why skip the hyperscalers? They're handing money to the other companies. They do not generate cash. They may not generate cash next year, and they don't buy back stocks. Okay, but a key, they're handing money to the other companies. Picks and shovels versus the gold miners themselves. Okay. Microsoft is the cautionary tale. CapEx has surged over 30 plus billion. Quote, our AI business surpassed an annual revenue run rate of 37 billion, up 123%. Our AI business, yet the stock is down 23%. Polymarket contract gives a 69% probability that Anthropic plus OpenAI will exceed Microsoft's valuation by December 31. That's interesting, right? Alphabet shows the same pattern. CapEx high, up 35 billion, up 107% year over year, and free cash flow fell 46% year over year to 10 plus billion. Google Cloud grew through 63% to 20 billion, backlog nearly doubling, but shares have dropped 6%. Okay, so what is the the takeaway here, right? The takeaway is, as you're looking at what you buy in the AI stock run, maybe think about that. Come back to the picks and shovels versus the gold miners themselves. In this scenario, the gold miners are the hyperscalers. In this scenario, look at their cash, look at their, their cash flow, their operations, look at their CapEx expenditures. Who are they handing money to? That's the key. Look at who they're handing money to. Because right now, truly, if you net it out, who is being paid to facilitate the AI the AI run? It's chips, it's memory, it's Corning with fiber cable. It's the other, it's Bloom Energy, Vistra, other parts of that AI stack, right? That's the key. That's the companies that are getting rich in this AI build out scenario. And that's kind of how I'm looking at it. Those are the AI stocks I'm buying, and kind of the reasons. And I thought this article was just a really good, example of why and how it makes sense, right? And that's why I think it's important. Okay, so look, if you're interested and you want to make even more money trading stocks, need a better way to do that. Look, this is my trading indicator, giving you the green boxes of buy alert, these red box are sell alerts. So in the last 86 days, it told you exactly when to buy and sell Micron to have made 68%. Okay. Just in these little, by the way, it sends you alerts, comes in on your phone, iPhone, Android, what have you. Okay. Could just boom, buy here, sell here, buy here, sell here. This is Micron. This is AMD. So to give you another perspective, let me show you the Micron of the AMD chart. Right there. Look at the AMD charts. Almost sometimes looks better. Look at that. So AMD, here's the buy all the way to the sells and everything up 84 days, 175+%. Okay. So there's 86 days, 268%. Looks really good. Okay. So links are in the description if you want to check it out. It's right down there. It'll take you to X1 Algo. That is my website. It's my trading indicator. Spent about $30,000+ having this software built. And if you're interested, you can try it really for free for 30-day, no questions asked. There's a link down there. 30-day money back refund guarantee. You're protected by that. And I would pick the monthly or the quarterly, and you can have 30 days to try it. If you don't like it, then you can just basically cancel and get an instant refund. If you keep it and you use it on a go forward basis, there's no long-term contracts, nothing like that. You're month to month. Also, there is a live coaching sessions every week in the members area. And there's a private community as well in the members area that you can join and be part of an investing community, right? And no longer be alone in your kind of investing journey. So look, if you're trying to figure out how to make even more money and really lock in profits, this is a great way to do it. This is how the whales, this is how the smart money does it. They use technology to tell them when to buy and when to sell to make a lot of more money. Because I'm going to ask you, do you know when to buy and do you know when to sell any of your favorite AI stocks? And lock in that profit and put that profit in your pocket, in your bank account. And that's what the software helps you to do for about $1.10 a day is what it costs. Okay. So give it a look. Links are down there. See ya.